Welcome back, Cretan learners. Before the ad break, I introduced to you that is good ethics as well as unethical behavior in businesses. I'm going to quickly now move on to what we call internal control. Internal control. Let's quickly go and define what is internal control. But before I could define internal control, there is already information that you know from your previous knowledge. What is it that you know already? You already know at this point what is stock, all right? You know what is stock, and that businesses can experience loss of stock due to theft. This happens in businesses that stock can get stolen. At this point, you already know that a business can sell goods on credit, and that the business may also not be able to collect all the money from the debtors. This is a possibility. You can sell and not be able to collect all the money. All right. Now, what are the new words that you're going to expect from this internal control aspect? The first one, it is internal control itself. What is it? These are plans that a business uses to protect its assets. You have to understand that assets are very important to a business. We cannot be buying assets every day. So when we buy assets, we need to ensure that they are protected, that they are kept safe. And in order for us to keep our assets safe, we need to have internal control processes in place. And then debtor. What is a debtor? This is an individual, a person, or a business that owes our business money. That is, when we sell to a person on credit, that person becomes our debtor. But we can also sell to another business on credit. The moment we do that, that business becomes our debtor. Okay, now I'm going to quickly go on to the next one. A creditor. What is a creditor? This is a business or an individual that our business owes money to. So we can also buy on credit from an individual. When we buy on credit from an individual, that individual becomes our creditor. But we can also buy from another business. When we buy from another business, that particular business becomes what we know as a creditor. And then I'm going to quickly now go on to my fixed assets. What are fixed assets? These are assets that a business has bought, not for resale. That is, we don't buy them so then we can sell them. But we buy them so then we can use them in generating profit. Okay? For example, your equipment. As you can see here, we have a piece of equipment. This is equipment. We also have vehicles. Here is a truck. These are the vehicles. We use them to deliver goods to our customers as well as to bring goods from our suppliers to our business. We also have what we call land and buildings. This is what you see over here, whereby we have a piece of land and we have put up building there. That becomes an asset and we call it land and buildings. All right. Now we can quickly now go and define our internal control. Here's the definition. It is the systems or procedures that are put in place to monitor various activities in the business so that any losses are reduced or avoided altogether. It is not good for our business to be experiencing losses. So in order for us to avoid losses, we put in place what we call internal control processes. Okay? And then the main aim is to safeguard our belongings, such as cash, our equipment, or our vehicles. These need to be kept safe so that we can operate efficiently. Okay, now I want us to quickly go down to our internal control processes. Internal control processes. Stock control. You remember what is stock? Goods that we buy so then we can sell to our customers. Now, it is important that the place where this stock is kept must be safe from theft as well as rain together with wind. Remember, the last thing we'd want is to buy stock, then early in the morning, the stock is stolen. So the place must be safe. As you can see here in the picture, the place is secure. So our stock will not be stolen. It will be covered from the rain as well as wind. We must keep sufficient stock in shop. Imagine a situation whereby customers are coming and you don't have enough to meet the demand. That is not a good thing. That must be avoided. So stock control will enable us to meet our customers' demand. Documents must be completed for stock purchases as well as stock sold. Whatever movement of stock, it must be recorded. I'm going to quickly move on now to debtors control. You remember what are debtors? The person or the business whom we have sold goods to. Now, we have sold goods to them on credit, so they owe us money. Debtors must be carefully selected, checking if they are creditworthy. The last thing we would want is to sell goods to someone who cannot pay us. So we must check if they are creditworthy. The other thing that we can do to ensure that there is control on our debtors is to send regular statements to our debtors. Every month, we can email them, SMS the statements, all right? Or we can send them by post. That is how we can control our debtors. Debtors records must be kept. We must know all our debtors and how much they are owing us. All right, I'm going to quickly now move on to creditors control. Remember, what are creditors? The individuals or the businesses whom we owe money. Why? Because we bought goods on credit from them. Now, documents received and issued must be recorded correctly. In other words, when we buy goods, they will give us documents. Those documents must be recorded correctly. Different staff members should receive goods, and different staff members should work with the return of goods. When we buy goods, we should ensure that we don't have one person doing everything. We must have one person that receives the goods. Another should be dealing with the return of goods when we are not satisfied with some of the goods. Creditors must be paid promptly. That is, we must pay them quicker. It is wise that we speak to our creditors so that we can pay them on time to avoid them charging us interest or refusing to sell goods to us on credit in future. So that must be done when we are doing our creditors control. All right. Now, the next aspect has to do with fixed assets. How then can we control our fixed assets? Assets must be kept safe, remember, in a secure place. We can't be leaving our assets in a place that is not safe. All right. Staff using assets must take responsibility. If you are given a particular asset, let's say a computer, you must take responsibility for that particular asset. Regular checks to ensure that the assets are working properly. So, if we have given an asset to a particular employee, now and then we should ask the employee to bring the asset so we can check, is the asset still working okay? I'm going to look now at the last control, which is cash control. Now, with cash, you would have to know that cash is a very sensitive asset of the business. All right? So with cash, a document must be issued for all cash received as well as issued. Any money that we are receiving or any money that we are paying, there has to be a document. In other words, every movement of cash must be supported by a document. Cash must be kept in a safe place, all right? This safe place, it should be a bank, all right? So cash must be kept in a safe place. But if we are to keep it in the business, it should be in a secure place as well. But in most cases, our cash must go to the bank. Separate duties must be given to persons. That is, a person must be dealing with receiving money and another one paying money. So there must be separation of duties. We don't want a situation whereby one person is receiving money and the same person is also paying out money. There must be separation of duties. Why are internal controls important? Let's quickly look at that, the importance of internal controls. Number one, to minimize negative impact of poor management or fraud. The moment we have internal controls, we minimize poor management as well as fraud. When we have internal controls, we provide guidance to all interested people in the business. That is, we show them that we have our systems well in order. Internal controls help us to avoid poor business practices. And then number 4, when we have internal control processes in place, it helps to promote transparency as well as accountability. Then lastly, when we have internal control processes in place, it helps to encourage responsible behavior. Dear learners, I'm going to see you immediately after the break. I want you to grab something, and then I'm going to see you in a while.